we're getting the BOE stuff coming in, so
Wow.
Brent
Hey,
should be
Paul Franco,
what,
are you
man?
around? Paul, hey, hello.
Hey, Blake. Yeah, I see the
Hey.
cable taking a whack.
Yeah, the pound is getting crushed here. So, 8 to 1 vote. Well, that would be it.
Yep.
8 to 1. People were expecting a whole lot different than that. So they were
Yeah, I know one
expecting.
bank was looking for disappointment, and certainly they got the disappointment.
Yeah, I mean, I think the market was set up for a disappointment. That was the problem. You had everybody was expecting a very, very well. We haven't got the comments from Carney yet, but still, people were expecting maybe as many as three MPC members to vote in favor of a rate hike. So you only got two.
Mm-hmm. So,
So yeah, very, very disappointing very disappointing for the pound as of right now. So yeah,
yeah,
so eight to
I
one.
should. And that and the other bigger news to me, I think, was the Swiss franc, the Swiss Consumer Conference just absolutely got rocked. I mean, beat down like a wet rag. And I won this lady from Commerzbank. She nailed it. There were some people that were saying it had to do with the Swiss National Bank. It didn't have a damn thing to do with the Swiss National Bank. This had to do with their horrible economy. And she was saying it has to do with the deterioration of the economy. And to me that was spot on. Has nothing to do with the Swiss. I don't mean about them, their perspective. I mean in light of what happened like today. That is all about that extra move was all about the consumer confidence. I mean, you don't take a hit like that. Last month was -6, and this month was -19. That's horrible. I mean, boy, you're doing really well with your Swiss franc trades.
Yeah, I am. Thank you very much. I'm sitting those till we get to 99 cents, and then I might peel a little bit off of there. So
Boy, it looks like it's going to get to 99 cents at this rate. And you look at that consumer confidence, that's just horrible. A market just doesn't pull itself up. And I'll give you a good point that traders were asking about the crude. One guy was asking about the crude. He goes, "Do you think it's a great area to go on and step in?" And I was saying that the sentiment is just so horrible in the market. I'll just go on and point to that. I'm going to show you something here, and it's unbelievable how horrible it is. This is a big bias pivot, this 44.92, and I'll put on a 4-hour chart to give you a better perspective from way back here. This market, this 44.92, has been very key on the way down because once we got above it, the market rallied up to about almost $48. It came back here, and if I stretch this out, you can see here
hey,
that
Paulie, go back to the cable. I'm sorry, we got to talk about the cable. It's what's moving right now. Just
okay, sure. I'll go
you
and
know what I
switch
mean?
down.
Let's hang, or uh, why don't you? Well, I mean, we should
Yeah,
be
there's a
covered.
cable right now.
Yeah, we should be keeping our eyes on the pound right now because this is the news that's out right at the moment. So, and we can go back and look at the crude in a little bit, but I really want to see the cable how it reacts down here at 155.25. This is a real critical support for the pound. We will have trying to see the inflation outlook, near-term outlook is muted. Falling energy prices will continue to weigh on inflation in the mid 2016. Yeah, I doubt the Bank of England is going to be raising in this year. And watch the cable; it's going to come slipping right through 155 and a quarter right now. It's a big support, getting taken out here in the
Yeah, it
pound.
is. The 55 and a quarter is pretty huge. I'm
Yeah,
interested to see if they can
and the
pass it.
reversal that we've seen in the euro pound has been staggering. I was so tempted to buy that because we're in a descending wedge. I was so tempted to buy that this morning, and I didn't. And this euro pound could be a really big mover to the upside, and the pound's actually getting crushed right now. So.
You're right. Yeah, it is going right through that 55.25 at this point.
Um, but yeah, okay. So crude, just tell me what level I should be looking at in crude oil, and
Well, that 44.92 has been a huge bias pivot, and yesterday we got just a minuscule bounce off of that, and here we are sliding back below it. Now, I guess it's going to be key how we finish the week, but I was just telling people is that because it's so overwhelmingly bearish, and the ranges are even so small that you've run a lot of people out of the, out of trading this, saying that it's going to be. It's going to be a while before I think you can see a pretty good strong bounce. And I see a bounce, just an oversold bounce. We can't even get an oversold bounce, and we came near to 44.92 yesterday, and we got basically a 50-cent bounce, and here we are making new lows again, and we got as low as looks like we came down to about, I don't know, like 44.60 or something like that. But I guess we'll have to see how it plays out for the week. But it's just so bearish, and I was telling people I thought that the dollar CAD, at least from a very very short term basis, is a little bit stretched. But how can you sell dollar CAD when crude is just remains in the toilet?
Yeah, and I got some people that were concerned that the pound, or excuse me, the CAD isn't rallying with crude oil falling, and I'm like, well, tomorrow's, and this is yesterday. We had employment reports from both U.S. and Canada on Friday. It's gonna be tough for the dollar Canadian to break out. I mean, unless crude dropped below 40 today, I doubt the Canadian's gonna get much above 132. So. Um,
Yeah, I was sharing that with them on the earlier in the webinar on the Reuters polls of several banks. They see that it's pretty fully well valued here at 131, 132. So I kind of see it as is it's too far stretched, and it's acted tired over the last 10 days. But the lower crude keeps going. You can't fight it. I mean, I made some okay money over the last couple of weeks. Yesterday, I made enough money in a dollar CAD short to buy myself a Happy Meal, and I'm probably lucky that I didn't get my head taken off. And that's the God honest truth. So I'm just saying is I don't even want to sell dollar CAD even intraday right now until I see something, until I see crude really try and pick himself up, and I just don't see it here with crude. You're doing better, which I picked up euro near the lows yesterday. You're just doing better with euro. I mean, I think dollar CAD. I think bulls are getting worried, and I do think that the NFP has a pretty good chance to be in to disappoint because of the. That's why I didn't get a chance to mention to you yesterday before ADP is I wasn't surprised by that because the purchasing managers indexes between June and July they barely either met expectations in employment or they've been below expectations. So I think the risk is that this employment report disappoints, especially in the wage growth.
Okay, I just want to let everybody know I had a short pound New Zealand and a pound Aussie that I was short. I closed them both out, and I basically is a break even on both of them. So I just closed those two positions out. Just I don't the pound right now. Just in other news, Paul. Sorry, we're challenging what I would think is channel support here in the cable. So we broke through that support. This horizontal support. We just hit this channel support. You can see it here and here, right?
Yeah.
We just broke that channel support, but I think we still have comments that are coming from Carney. So I think now this is all new to us with all the votes. The inflation report just happened to be, fall at the same time. They're calling, everybody's calling this Super Thursday. We should have Carney's comments coming through at some point here this morning, and I don't want to be around. Carney's a wild card. He's been very hawkish. He's been more hawkish than dovish in recent months. So I don't want to be caught on the short side of the cable. With him speaking. So just letting everybody know if you guys are following. Amanda says 35 minutes till conference. Is that press conferences in 35 minutes? Is that what you're saying, Amanda? If that's the case, then that's fine. Okay, thank you. So I'm just I'm wanted to make sure I have absolutely no pound exposure at this point, but you have to be careful down here. I believe. All right, Paul, how's everything else been going?
Everything's good. I just want to share one thing is that Scott said, what do you think about an update for Steve Volge sometime this month? So I just want to share that with you.
Probably not a bad idea. He's traveling. I actually talked to him a couple of days ago, and he was heading out of town and going to like some island, as obviously this time of the year, it's what a lot of Europeans do. And so I'll try to catch them here in the next week or two. So
I'm
yeah.
glad you mentioned that because that's one of the things I was pointing out to traders is that the dollar is pretty stretched here, and I said that I think that the risk is that the NFP disappoints. But even if the NFP
Dollar's
comes
pretty
in line,
stretched. What do you mean the dollar's stretched?
as far as I'm talking about this for in the rally, a bit stretched up here. I think I'm saying is the reason I'm saying.
Wait, hold on. Okay, so I don't know. Correct me if I'm wrong. The dollar hasn't done anything. Now the dollar may be up against resistance, but I don't.
Well, that's
I
what I
don't.
mean. It's up against. Only thing I was saying was that I think that there's a chance that the NFP disappoints a bit, but also with a lot of Europeans going on holiday in August and away for a few weeks, I think that if the dollar does pop up, I still think that it will probably starting next week kind of pull back a little bit of the gains.
So what makes you say that what makes you say that non-farm payroll is going to disappoint?
Well, I mentioned to you before that I didn't get a chance to mention it yesterday, but I mentioned what the other people was that the purchasing managers from June and July and the employment components have been weak from June and July. That's why the ADP didn't surprise me. They did come in like that, and I think that and in light of that, because the numbers for the most part have either barely met or they've disappointed. And that's why I think I wouldn't be surprised if wage growth kind of stinks up the place again also.
Did you see that Goldman actually upped their NFP forecast yesterday after the ISM number?
Well, I mean, they can go well, but Goldman has that what do they call that? It changes each time. So I don't know. Like I said, I just think that there's a chance that it comes in a little bit disappointing. I think at best it meets expectations, and there's a chance it comes in a little bit weaker. And only thing I'm attributing, I'm not saying like it's a feel. No, I'm saying that the June to July managers indexes have come in on the weak side or barely met expectations in their employment components, the subcomponents for the employment. I mean, that's just the facts there. That's not even, I think it's just I'm saying is, and so when you extrapolate that in, that's why it wasn't a surprise when the ADP ended up coming in a little bit shy. I just think that, I mean, to me, I think that that's the way it's going to go on and play out. But we'll see how things go. But I think there's a chance. The risk is that it falls a little bit short. That's what I'm sticking to.
Okay. All right. Sounds good. I mean, I'm not aside from the dollar Swiss, I'm not going to be long or short the dollar. Just want to hear your views why you're so bearish on the dollar at this point.
Well, I'm not really bearish. All I was telling people was that I told them, I go, you just have to have different what do you call it, scenarios. And one of the scenarios that I have in my mind is even if it barely meets or whatever, I can see the dollar move up. But I think it's going to start to run out of gas next week. It doesn't mean that you're to be short. I'm just telling people. I said, it doesn't mean you have to be short. What you want to do is if it moves up next week and it starts stalling on Monday, European traders are going on holiday. So that's going to give the market excuse to say, this is a great area to take profits. And I can guarantee you that if the dollar starts to pare back its gains on Monday, early Tuesday, you're going to see the headlines. Traders are going on holiday and they've decided to go on and book in profits. I'm not saying that you just go get short. I'm just saying that's the way different scenarios to go and look at it. I think that even if the dollar moves up, I don't think it's going to skyrocket, but if it moves up, I think it's kind of baked in the cake, and I could see it start to fade in for the next couple of weeks.
The flip side to that is if we have a blowout non-farm payroll number, okay, and the number is really strong, the dollar can go on a rampage, and because the liquidity is so thin, it can rip people's heads off. Because if, like, let's say we have a blowout number, let's just put that scenario in play, and let's say instead of creating 220,000 jobs or whatever the market's expecting, let's see, the market's expecting, the market's expecting 220,000 jobs actually. Let's say we have a blowout 290,000 jobs number. The dollar can go on a rampage, and no one on vacation is going to want to stand in the way and sell it, because everybody's like, I'm not selling it. I'm not getting in the way. I'm on vacation. Then you have people that are wanting to cover the dollar because they don't think the dollar, they may have been short. They have to scramble out and buy it, and they have to pay up to get it. So and when you have thin liquidity, the problem is that those moves, if they get legs underneath them, they could really take off. So I'd be careful, man.
Yeah,
I mean,
I'm not saying to short the dollar. 'Cause obviously, we go to a number like that. If you think I'm going to stand the way of the dollar, people are crazy. But I always tell people, it's not a matter of being right or wrong. It's the way that the market goes and sees something, and you want to trade it that way. The case in point was yesterday or day before yesterday. Mr. Dove, or one of the Doves, Lockhart, comes out and says, I'm raising in September unless I see a material deterioration in the market. That's a game changer. So if we get 295 tomorrow, that's a game changer. There's no way I would say advocate, you need to fade the buck from here. But I'm saying, so that's what I'm saying is, who thought that Lockhart was going to come out and say, a Dove, say, I'm raising in September unless I see a material deterioration? I mean, that's like, you can't ignore something like that. So I'm saying is, if the number comes out of blowout, like say 295, I'm not going to be advocating, you have to go in and short the dollar or fade the dollar. I'm just saying, as my scenario is, I think there's a possibility it doesn't meet expectations, and in light of it not meeting expectations, and September pretty much is baked in the cake in most people's perspective, then I think the risk is the dollar would come back in next week. But like I said, a blowout number, I'm not looking to go and fade it. I'm just paying the scenarios, and I will have no dollar exposure whatsoever when they release S&P tomorrow.
All right. Well, yeah. I'm not going into tomorrow aside from the Swissy, which I plan on holding anyway. I probably will not be. I'm short a little euro right now, but that's from yesterday, and I'm basically flat. But I'm not. I'm not going into tomorrow. I just would, especially if we have a strong number. Now I know you're expecting a weak number, but if we have a strong number, I would not get in the way of the dollar. I would not try to fade it because, like I said, I've seen too many things happen when the market's illiquid and people need to own something. They'll pay anything for it, and when there's no offers, they have to pay up for it. One of the things that I've seen, and I want to reiterate here, over the course of my career. First of all, currencies are probably one of the currencies are one of the longest trending asset classes I've ever seen, and historically you look at some of the trends that have really established in the currency markets. When they take hold, they're hard to stop, and especially when you have, like, the most dominant theme in the market has been, and I know that's what got me long the dollar through here, and as everybody that listens here, who's been listening here for the last 2 years, at least 2 years, knows that I have been playing the divergent central bank theme for when the dollar was down in the 80s, when it was in the 70s. I've been saying we have central banks going in opposite directions. This dollar is going to move higher quickly. And it blew up, and I was long the dollar, and I reaped the benefits, and many people that were listening here did. That theme has not stopped. That theme has not stopped, and that theme will only continue, and it's only going to get worse. Maybe, and you look at the Bank of England. The Bank of England, as we're seeing it right now, minus the comments that we've gotten from Carney, we may not raise rates this year. And a lot of people were banking on the fact that the Bank of England could even be the first central bank to raise rates ahead of the Fed. Based on what we just saw on the MPC votes, that's very unlikely. So you have a divergent central bank theme that's not only apparent right now, but is becoming more apparent as central banks cut. You got the Bank of Canada that's probably going to cut. You've got the RBA that's probably going to even cut again, RBNZ too. Maybe the Swiss National Bank's going to ease more, as you sent out an article this morning about the Swiss National Bank. And you're right, their economy they're fighting deflation like it's nobody's business right now. and same with the Nordic countries too, you have central banks that are going in opposite direction. If you think that if you think the dollar is going to stop right now, and I'm not talking about you in general, I'm talking about people in general, the problem is you've got a lot of people fading the dollar. This big, huge move that has been a, you want to talk game changer, this is a 30-year game changer. Since I had been in the business for the last 20 years, all I have heard is you should wipe the dollar or with dollar bills and throw it in the dumpster. That is the only thing that I've heard about the dollar for the last 20 years I've been in the business, is the dollar is the biggest on the planet. That 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 message has changed in the last year. And you have institutions and you have banks that are and corporations that are now changing and hedging, and the central bank divergent theme isn't changing. Wouldn't you agree, Paul? I mean, are we?
No, no, you're right. And like I said, I've been hammering on and I'm talking about hammering to the bullish side on the dollar. When that's why a lot of times I've gotten in a lot of I'll be honest with you, I've gotten a lot of fights on Twitter over the last year and a half because I got sick of people talking bad about the dollar. I know, talking bad about the dollar, and now I'll admit it. I goad people. I make fun of people now. I go, where's all the euro was the greatest thing. Where's everybody's wrong about the dollar. I just meant from a day trading and a very short-term perspective for a few days, a week and a half or so, I think that the dollar could pull back. And you're right. You were the only person. When I say the only person, I'm not talking trading world. I'm talking about across all of FX that was talking about this divergent policy thing. You've been mentioning this from, I guess, about almost 18 months back. Before this even happened, you said, it's going to change, and the Fed's going to be the one to go in and change it. And I remember, like I said, you were getting bullish the dollar early last summer. I remember I was looking for the dollar to go and bottom out in April, and it didn't bottom out until June. I just think that the dollar has an opportunity to go on and pair in some of its gains once we get past NFP over the course of a week to 10 days. But I'm bullish the dollar because, like I said, I've said it before, all the multinationals were crying like little Girl Scouts and yelling, bail them out in March. And I said before, I go, when the dollar starts taking off, these multinationals are going to learn their lesson, and they're going to start hedging and hedging for a dollar move up higher.
It's the pain trade. It's the pain. I mean, the dollar moving higher aggressively is the pain trade. It is going to hurt, and it's going to hurt a lot of people, not just traders that are just trying to fade it near term. It's going to hurt a lot of corporations here in the United States. It's going to, like you had mentioned, the multinationals. It's a major tectonic shift in the currency market over the last several decades. As I've been preaching for the last 5 years, money is leaving emerging markets in China and India, and it's coming home. It's been gone for a quarter of a century.
Yep.
And it is coming home. And it's coming home in droves. And I got asked by Alex, but why are you so sure the Fed would raise rates? It looks more like they want to keep up the hike expectation only. You know what? They have to, because they said so. And Fred yesterday, or the last couple of days, he always jokes with me, and I'm like the Fed has credibility. And you're like, well, they're not very credible, or as credible as the mafia, jokingly. But listen, if the Fed wasn't credible, no one would listen to hang on every word that Janet Yellen says. The reason why people hang on to every single word that Janet Yellen says and comes out of the Fed's, wheelhouse, or out of their mouth, is because they are extremely credible institution, and they have to really defend that credibility. They said rates are going up this year. They're going up this year. And we're going to look back 3 months from now or a month from now and say, well, they told us so. They told us it was going to happen. Or is it so shocking that they actually raised rates? No, they told us they're going to raise rates. It's because
Yeah,
they freaking told
that's good.
us.
Well, I've been saying that. I've been saying that for a while. Is that when you look at the ECB, the Japanese, the BOJ, and most recently the Swiss National Bank, I've been saying that, and people laugh. I go, the Fed is the absolute only central bank in the globe that has credibility, and that's what I say. That's why we've been able to manage the debt even at these levels, and why the Fed's not going to go on and raise rates and then turn around and backtrack and cut rates. That's why they've played it so well and have waited so long. But we're at that point now. It's time to go on and raise rates. I think that they should wait till October. But the Fed's done a masterful job, regardless of whether people say it or not, since 2012, managing the debt load that we had. And as the dollar gets stronger, people that buy dollars, and I'm talking about foreigners, they put them into the credit market, or either if they put them into the stock market, they're not only getting the dollar appreciation, they're on top of that getting the gains that are going along with the S&Ps or the moves that we've even had in the bonds. So it's almost like a self-reinforcing move in this currency move, that as we move into the dollar, all I'm just saying is for the next, once we get past NFP, I can see the dollar pare back gains for the next 7 to 10 days. But longer term, yeah, no, I've been a big dollar bull. I'm saying is, I kept saying that, I felt you were the first one trumpeting that, but that the dollar would keep on moving higher, but for a lot of different reasons, because of low inflation, obviously the strong currency, excellent employment, growth looks good, productivity looks good. I'm sorry the rest of the globe sucks, but here in the U.S., it doesn't suck. It may not be like it used to be, but we're in pretty doggone good shape. And I always tell people, I'll finish with that, don't worry about the USA. We'll be just fine.
Daryl had brought up this a very big descending trend line in the Swissy, and we should probably take a real quick look at it. But Paul, I've kept you here a little too long. I never mind debating, and so thanks for being here and hanging out. I
Okay,
think
Blake,
Daryl
thanks
was
a
just
lot.
pointing out this monthly descending trend line. I mean, it will come into play. I guess and we're coming into play like pronto. Hold on, let me remove all these fib levels really quick. Yeah, we're coming into play, Daryl, and he just said previous two highs. It comes in around 96, 98.50. Is this what you're looking at, or something else to take partial profit? No, I was actually looking at the 786 retracement, but look at this monthly chart. Okay, um, I guess the way we have to look at it is this. Um, wow, because we're there right now, or we're real close. I mean, I guess it'll be 99. No, this is just it also coincides. So I guess it would make sense to lighten up here, Daryl. But look, and I wasn't even looking at that, so I'm glad you brought that up. But this 786 is why I'm taking profits at 99 cents. So just, think about a breach above these highs, probe above those highs, stop some people out. But I didn't even see that this trend line. But here's the thing. I really want to hold on to short Swiss exposure unless I get word before you do, but we'll probably figure it out together, that Greece has fallen into the Aegean Sea somehow, or Italy is imploding. Unless that is happening, I plan on being short Swiss francs. Here, let me read something that Paul sent out. This is from Paul Franco this morning. Swiss franc hits 5-month low versus euro. Expectations of more Swiss National Bank action grows. Okay, so I'm going to read you this article from Reuters that Paul sent out this morning. Okay, oops, damn it, I didn't mean to do that. Swiss franc fell to its lowest in 5 months against the euro on Thursday as investors cut positions after recent data showed that Switzerland was mired in deflation, added a pressure on the central bank to ease monetary policy further. Traders said with the Greek debt crisis also moving onto the back burner. Holy crap. Okay, so this came out this morning. How many times have you heard me over the course of the last 2 weeks say that Greece has moved to the back burner instead of the front burner? Joseph said many, many, many times. So these traders that Reuters are obviously interviewing, listen to the Morning Edge. I'm just joking about that. Safe haven inflows, which have underpinned the franc in recent months, were ebbing. Well, excuse my language, no crap. uh, you don't need to hold Swiss francs anymore because you have to pay interest to hold it, so you don't need to hold it because Greece is okay for now. Well, no kidding. We've been buying the Swiss franc. We've been buying the dollar Swiss for the last 300 pips because of this idea that is now making it to Reuters. Okay, so added to it, the Swiss National Bank has been intervening in thin trading conditions to drive down the franc. Traders say. Okay, blah blah blah. But anyway, I mean, look, this story is a big story. It will continue. Thank God we've been on it for the last couple of weeks. All right, and you know what's even better about all this? How much you guys pay for this webinar? Nothing. All right, I'll be back in a few minutes. You guys don't go anywhere. When I come back, we'll start with our morning analysis, and hopefully we'll have some comments from Carney. Don't go anywhere, folks. Thanks for being here.